Hello, this is Brian Tehako with the TnT Group, doing a webcast for NakedTrader.com. After basically a week off, over a week, we are pretty much back in full swing today for a couple weeks until Christmas break. So basically, kind of kept up with the markets over the course of the week. Obviously, the big news that came out basically yesterday and going into today is the bailout for Ireland. Kind of surprising. Seemed like the market kind of took it positive, and then now it's been pretty much negative all day. On top of that, we still have the tensions in Korea. Now there are rumors spreading about Belgium. Also, we kind of talking a little bit about Spain again, and all of a sudden Hungary is getting beat up today. So it's kind of been the tale of the story is take care of one, and then the next one pops up. Kind of like that little mole game. Used to play at Chuck E. Cheese, hit one down, next one pops up. It's kind of what's been going on here. It feels that way. But we really can't, make a big move down here in the U.S. stock market. Just in the last couple of minutes, we've seen a nice move down here in the European stock market. Right after their close at 10:30, they seem to reprice it in. Had a nice 20-tick sell-off in the Euro stocks. Minis are still sustaining above this 72.5 area. We get below that area, I think you're just going to see a big, massive selling, basically all the way down to 1146 area. That would be the big target for the day if we could get down to 1146 today. Obviously, that would be a major move. I got 1165 would be a little hiccup. And then 1160 would be the next hiccup. So we got some room on this downside below the 72 area. I think this is about the third time down here in the last couple of weeks. So be careful of that spot. Looks like we're trying to make a move for it right now. Other than that, it seems like with these North Korea tensions, usually we're getting almost like an inverse of oil to equity, which makes sense to us. So be careful trading that oil inverse to dollar. It actually could be trading with the dollar. I think as you get a dollar rally, you'd almost rather be short equities and long oil instead it used to be the other way. Just because I think people would rather hold a hard commodity and that any type of tension, because they're talking about nukes in Iran. You start getting any type of Middle East, Chinese, North Korea, all this combined, we're going to see a demand, obviously, for oil. So be very careful watching that, and I think gold is caught in the middle. Basically, right now, as you see it, if you get a dollar rally like we have today, pushing a 1% type move, and you get gold basically staying positive to just a little bit of negative, that is in the price of gold is a rally. So remember that. You're not going to see that sell-off because of these tensions, and actually if you see a dollar rally and a gold rally, that's actually a really strong move for that gold product. That's pretty much it for today. We are basically trying to stay short some equities to see if we can get a break below that 72. Other than that, that's pretty much the only long-term position that we have on right now. I think it's a good risk-to-reward trade. I like staying short basically below this 82.5, 83 area, and I think the risk-to-reward is great. So jump on that trade. If you get a break through the 72 area, I think we're going to probably add on, double up the position a little bit with a close stop back above that 72 area. Again, Brian Tehako coming from the TnT Group, doing a webcast for NakedTrader.com. Glad to be back and happy trading. Remember, if you are still trading, don't be drinking.